Hi, this is Jim Welsh from macotides.com. Thanks for tuning in. Well, on October 1st, the ISM manufacturing report for the United States came out, and it showed that manufacturing had dropped to 47.8. This is a diffusion index, meaning that anything above 50 means expansion, anything below 50 is contraction. So the fact that the manufacturing sector dropped comfortably below 50 raised some concerns about the U.S. economy and solidified what I've been saying is that manufacturing is in a recession already. What added to those concerns was on October 3rd when the ISM non-manufacturing number came out at 52.6. And yes, it is still comfortably above 50, but the point that kind of caught the markets by surprise, it had dropped from 56.4 in August. So that sharp deceleration in the service sector raised concerns about the potential of a recession. So let's take a look at the consumer, since consumer spending 70% of GDP, and let's see what's going on with the consumer and the odds that consumer spending will continue to hold up the U.S. economy. The first chart we're going to look at is consumer spending as a percent of global GDP. And what we can see is consumer spending is 17% of world GDP compared to 16% for China. So the U.S. consumer not only is holding up the U.S. economy, but also the global economy. So when we ask the question, it really should be, can the U.S. consumer save the global economy? We got some good news last Friday on October 4th. The unemployment rate fell to a 50-year low going back to 1969. On the surface, that's great news. But if you look under the surface, there are some signs that things are probably going to continue to slow in coming months. Monthly job growth has slowed since the beginning of 2019, if you look at the 3 and 6 month moving average, from close to 220,000 to about 140,000. I think that slowing process is likely to continue. One of the reasons, the National Federation of Independent Business Small Business Confidence is started to pull back from the highs that we saw about a year ago. And the reason why this is important, small businesses create about 50% of all new jobs. So although this index is comfortably above where it was in 2010 through the end of 2016, it has started to soften. It implies that small businesses are likely to pare back some of the hiring that they've been doing. Weekly wage growth is also slowing. In the August 5th video I looked at things like total hours, overtime hours, and what they were showing is that the number of hours worked, overtime hours, had dropped considerably over the last 6 months. Well, that has an impact on people's paycheck. And what we can see is 6-8 months ago, paychecks were growing at a great level, close to 6%. It has slowed to about 4.2%. That's still a pretty good number. As you can see, it's hovering where it's been really since 2011. But it has, in fact, slowed. That means consumers will have a little bit less in their paychecks going forward. Finally, looking at consumer spending and going back the last 4 or 5 years, we can see a number of individual quarters where consumer spending spiked up either to 4% or modestly above 4%. And each time that happened, in subsequent quarters, consumer spending fell back. So there's a natural ebb and flow to consumer spending, and I think we're at a point where we're likely to see consumers pull back a little bit. The uncertainty regarding the trade talks, I think, are weighing on the outcome in terms of going forward with job growth, wage growth. But the bottom line is, I think consumer spending will slow modestly. I don't think we're headed toward a recession, but I think the growth that we have seen, the best times are behind us. Thanks for tuning in. Hope something good happens for you today.